Good morning. Thank you so much for joining me. My name is Jenna Witherby. I'm one of the advisors at 401k Plan Professionals, and today's webinar is about health savings account investing, and it's one of my favorite topics to talk about and educate people on. This is a part of our webinar series, and if you're not familiar with our team at 401k Plan Professionals, we serve plan sponsors with their retirement plans. And we also serve the participants inside of those plans. And we work with a lot of different sizes of retirement plans, companies serving in many different types of industries. And a topic that has come up quite a bit over the last several years is health savings accounts. So excited to share more with you today. These webinars are typically about 30 minutes. I'll leave some time for questions at the end. If you have questions throughout, you can just drop them in the chat. Our webinar series is intended to educate people not only on 401k or retirement savings related topics, but all sorts of financial topics that may touch your lives. We have 18 webinars throughout 2026. You will get a recording of this afterwards, and all of our trainings and webinars and FAQ videos are out on our website, 401kplanprofessionals.com, as well as our YouTube channel. And I always tell people too, for any future webinars you're interested in, just register for them, even if you don't think you can attend live, because you will be sent the recording automatically afterwards. So health savings accounts are a tax advantage medical savings account for those who are enrolled in a high deductible health insurance plan. With a traditional PPO type health insurance plan, you may have low or no deductibles and higher monthly premiums. High deductible plans are the opposite. So you have higher deductibles, but lower monthly premiums. And the thought is, since you're saving on your monthly premiums, the health savings account can be this piggy bank on the side of your high deductible health insurance plan to save for current and future medical expenses. HSAs are the only account out there with triple tax savings. I'll talk about that more in a moment. Again, they are available only to those in high deductible health insurance plans. You have to have no other insurance, no Medicare, and you cannot be a dependent of someone else. Commonly, HSAs are connected to payroll, or you can fund them on your own outside of work. A lot of times, employers will have a link where your deductions are sent right from payroll to go right into your account. Not all the time, though. This may be something that you're funding on the side, and that can be something you are funding um, periodically, or this could be a one-time lump sum deposit. So let's talk about the triple tax savings. First of all, contributions may be made with pre-tax dollars, which decreases your overall taxable income today. You can invest the money and they can grow tax-free. The investments can grow tax-free. And then you can take the money out tax-free to pay for qualified medical expenses. There is a list for HSAs that include all qualified healthcare expenses. And this list is evolving too. It has changed over the years. So that's something you can always research and take a look at. What kinds of medical expenses are we talking about? But the triple tax savings in and of itself is a huge benefit of the health savings accounts. Here's more vital stats. There is no time limit for using the money. So it's not a use it or lose it, unlike an FSA. You again, can invest the money. Commonly, you have a list of mutual fund options, very similar to a 401k. Sure, you could leave your HSA money in cash, but I think that's one of the big misconceptions is that it has to stay in cash. Make sure if you have an HSA and you're not investing the money yet to ask and inquire and research into, do we have some mutual fund options that we can invest the money in? There are maximum contribution limits, very similar to a 401k or an IRA. There are annual maximums that are set. So for 2026, if you are enrolled in a high deductible plan and you are under single coverage, your contribution limit is 4,400. And then if you're on family coverage, it's 8,750. Once you are over age 55, you can put in an additional $1,000. That's considered a catch-up contribution. Unlike a 401k, though, the limits you're looking at here in the circle, that does include employee plus employer contributions. Some employers do not contribute to their employees' HSA accounts, but some do. They might do it on an annual basis or a monthly basis. There might be different factors in order to qualify to get their contribution. But if you are someone that does have an employer contribution into your HSA, just be mindful that the limits you're looking at include both your money and the employer money. So some additional rules. We talked about maxing it out, includes the employer contribution. We get this next one a lot. Can I contribute if I am age 65 plus? Yes, there's no age restriction on contributing to the HSA. However, once you enroll in any part of Medicare, you can't put any new dollars into the HSA. If you plan on enrolling in Medicare mid-year, just make sure, be mindful, you have to stop contributing to your HSA 6 months prior to starting Medicare. If you are planning on enrolling in Medicare, you can still contribute to the HSA, but you will need to prorate the formula based on the number of months you're not enrolled in Medicare. That would give you your amount you can contribute for that year. So once you get up near that going to enroll in Medicare age, definitely would encourage you to talk to a professional, research into the timing and the rules. That's the only thing that you want to make sure as far as a contribution age limit. Now, there is something called the shoebox strategy. This is not something you have to do, but this is a strategy that some have chosen where they pay their current medical expenses out of pocket. You can save your receipts. Meanwhile, you're investing your HSA contributions and you have the potential, to make that money work for you. And then later on, you can reimburse yourself. There's no deadline for HSA withdrawals. As long as the expense occurred after the HSA was established, you could reimburse yourself from your HSA at any point in time. You got to stay organized with your medical receipts, of course, and some HSA providers even have a service where you can take a picture or scan in your medical receipts and save them essentially in the system. But that is a strategy that some have taken to kind of get their HSA dollars working for them over the years. So you can seek out some growth potential. Disclosure here, there's no assurance that any investment process or strategy will achieve its goal or objective. So just keep in mind there are risks there with investing, of course. Some investing considerations. So a lot of times HSA accounts will have a threshold that needs to be kept in the cash part of the HSA. Then anything beyond that can be invested. A lot of times it'll be 1,000, 2,000. I've seen 2,500. Where sure, you need to have a buffer, some money just sitting in the cash part of your HSA where you can use your card and that payment will come out. But everything beyond that, you may invest a lot of times in low-cost mutual funds. A lot of HSA products even have auto invest, meaning you've got your cash portion and then it knows that any dollar coming in on top of that will just automatically be invested over in the investment side. You don't have to do auto invest. You could just go into your account every once in a while, see where it's at, and decide how much money do I want to move from the cash part over to the investment part. But that auto invest feature is nice if your intention is to keep as much money as possible in the investments. A lot of HSAs offer individual mutual funds, but also some model portfolios called target date funds. So if you kind of want a one-stop shop, make it simple for you, you could choose one model that's correlated to your age and your approximate retirement date. Like a standard brokerage account, buy-sell trading occurs with market and portfolio risk. We don't believe that short-term trading is prudent. So if you know you're going to have, some upcoming medical bills, something big, you might want to just keep that money in the cash portion. But if anything does come up, you can easily transfer money from the investment part over to the cash part. I would say most take a couple business days. Just give yourself, it's not instant, but it probably takes a day or two to transfer money from the investment portion of your account over to the cash part to actually be used with your HSA card. So when you log into your HSA website or on the app, you may see some areas that talk about investment options, that auto invest feature, cash threshold, transfer funds, and rebalance. Your HSA may have two options where the investment part of things is self-directed. So you pick the investments, or say we help you, or if you have another advisor you're working with that's going to help you with selecting your investments. Some have managed investment options where for an additional fee, you can elect a managed service where you're kind of giving over discretion and another company is, building and changing your portfolio as time goes on. Consider reaching the IRS maximum as soon as you can. So a lot of times what people will do is contribute to their retirement account, make sure they're getting the full company match, but meanwhile also be building in their HSA. Once they've maxed that out and gotten comfortable with that every year, then come back to the 401k and put more in there. Because it has the triple tax advantages, plus we know you're going to have medical expenses in retirement, we all will. It really is a nice account. And so to take advantage of those features. And consider coordinating with your retirement strategy. I just mentioned this, but a kind of a prioritization framework. Again, making sure you're taking advantage of the 401k and any employer match, going to the HSA, and then coming back to the 401k. But these are all different things we would talk with you about with your own situation, your plan, your match. What are your HSA features? The HSA deserves a prominent place in your whole retirement strategy because of its unique tax treatment. Something I didn't mention yet was after age 65, you can even use HSA money on non-medical. If you did that, say you took money out to go on a vacation, you can use your HSA money for that after age 65, but you would just pay regular income taxes on that distribution. So in a way, it almost acts like a 401k if you're using it like that. Now, most people know I'm going to have a lot of medical expenses in retirement, so you're not going to have a problem using your HSA money on medical, but I wanted to mention that as well. So let's go through an example. Let's say you contribute $3,000 a year to your HSA and you use some of it for your medical expenses, going to the doctor, the kid gets sick, kid breaks a leg, whatever it is. But the portion you don't use, you invest it, and let's assume you earn 6% a year in interest, and the interest is compounded. If you did this starting at age 25, your HSA value could very well be $250,000 by the time you reach age 65. If you start at age 35, $125,000, etc. So not every HSA is equal. Another thing to keep in mind would be any monthly account fees, investment fees, fund expenses, minimum cash requirements. And you may not be aware, but you can even transfer your HSA assets to another HSA provider that might have better features, better investment options, lower fees, while still continuing your payroll contributions to your employer's HSA. So that would be called a trustee to trustee transfer, or you may have heard the term 60-day rollover. Now, if you don't deposit the funds in the other HSA within 60 days, that would be considered a taxable distribution, subject to both regular income taxes and a penalty tax for not using the money on qualified medical. So just be careful of those things if you are considering a trustee to trustee transfer or any sort of rollover of your HSA dollars, but that is an option. So used thoughtfully, an HSA can really be one of the most tax efficient investment accounts available. If you would like to meet with one of the advisors on my team one-on-one, ask questions about your HSA, ask questions about the investments and how does that work, whatever it may be, we do have days set aside on our calendars that are called office hours. You can sign up for a one-on-one virtual session with us. It's really nice to screen share, look through your account, talk through your questions, and get you more individualized advice and answers. We do have a number of other webinars coming up. Some are more focused on plan participants, kind of more broad messages like the economic and market update next week. We have a Medicare webinar in September, retirement by generations for millennials in November. One of our more popular webinars is every January. We do a retirement planning considerations for the year and a market update, talk about the new limits for the year, and different things to think about. We also have webinars that are more plan sponsor focused. So in September, we have one on lifetime income options inside retirement accounts, and I host fiduciary training as well. So for plan administrators and those that are working very closely on the inner mechanics of their retirement plan. So this QR will take you to register for all of our upcoming webinars. And again, if you can't attend them live, that's not a problem because you will be sent the recording automatically, and the recordings are out on our website and our YouTube channel. So here's just some of the topics that we're covering in 2026, and we are hard at work getting our 2027 webinar schedule shelled out. All right, if you have any questions, you can drop them in the chat. You can go to our website, 401kplanprofessionals.com, and then there is a tab up across the top for office hours. Someone had asked about the office hours link. Let's see. If your spouse is under 65 and does not have an HSA option at work, can they contribute to an HSA $1,000 a year as an individual HSA account? I would have to ask more questions here. If you're on a family plan and I believe it's if the account owner is age 55 or over, then you can do that catch-up contribution. But we could talk more individually one-on-one about your specific contribution limits. And by the way, if you accidentally go over your contribution limit for the year, that does happen time to time, not so much with payroll deductions from your employer, but I see that sometimes when someone's contributing on their own, there would just be a reversal. You'd get a check back from your HSA provider. You would have to claim that as income for that calendar year. Yeah. Does T. Rowe Price have an HSA investment plan? I would have to research into that. I have not personally come across an HSA product from T. Rowe Price, but I wouldn't be surprised if they did. I'm happy if you want to maybe set up an office hours session, we could chat more about that. For investing, can I track my investment amount of my balance? Yes. So HSA providers will commonly have a total account balance and then they'll break it down into two parts. Envision your HSA has two parts that add up into one overall account balance. You'll have your cash balance and then the investment balance. When you say no other insurance, does that include employer provided health, vision, and or dental insurance? I believe it's just other health insurance. It wouldn't be those ancillary kind of add-on products. With the age 55 catch-up of $1,000 for family, does that apply to each spouse? I would need to look into that as well. I'm not going to say an answer because I have a guess, but I would have to look into that. I apologize. I don't know that for sure. All right. So what I would recommend is if you have specific questions, want to set up a one-on-one with one of us, please reach out and we can get something on our calendar. Here's our phone number, here's our email addresses, and then again, our website, 401kplanprofessionals.com. And one last time, here's the QR to sign up for upcoming webinars. And again, my phone number and email address as well. All right. Thank you so much for joining this morning. Really appreciate your time. Again, this is a topic I'm really passionate about. We are really big fans of HSA accounts, and inevitably they come up in the whole retirement planning conversation. They're becoming very prevalent nowadays, and they're a great way to save for not only current but future medical expenses, and they can be absolutely a part of your overall retirement planning strategy. All right, thanks again so much for joining, and I hope you have a great rest of your day. Take care.